Hey guys, I welcome you in this wonderful video. So I will be talking about trend trading, how to analyze a trend using price action and how to execute your trades from that particular analysis. So there are a few methods and a few approach that I use when I trade a trend or a market that is flowing in a manner of a trend. So in this video, I'm just going to be highlighting the most important parts or the most important aspects of trend trading, which include observing or identifying a healthy trend, detecting the trend, and also knowing the position and how to act in a particular position of the price, as well as using patterns and confirmations so that you get accurate entries. So without any waste of time, let us just get started. So I'm here on US30, so you can see that the price is moving up, and that is clearly obvious. Why is it obvious? Because there is a repetitive pattern of higher highs and higher lows, meaning the highs of the market become higher and the lows as well, they become higher. So this pattern, the repetitive patterns of highs becoming higher and lows becoming higher, that's an easy way of identifying a trend. So not just a trend, but obviously all the other structures of the market. So meaning if this pattern is inverted or it's on the opposite side, meaning it's pointing down, that means it's a clear downtrend. And if it's not clearly visible, that means that the market is in a range. If there isn't any higher high or any lower high or any lower low or higher low, that means that the market is moving in a range, meaning it is directionless at that moment, meaning there isn't any player that is dominating. So let us talk about the uptrend. You can use this method to detect it, or you can use moving averages, but this is a pure price action video, so we're not gonna talk about that. So what you need to know as a trader is that when you identify a trend, we have healthy trends and we have unhealthy trends. For an example, in this case, this move here, this is a healthy trend. And one person can ask a question, why is it a healthy trend, or how can you easily detect if a trend is healthy or unhealthy? Obviously, this is a healthy trend. Why? Because this flow is not broken. The way the highs and the lows are being formed, they are formed the same way, meaning we don't have a break where we have now a low which is breaking the previous low and then the market comes back in. I hope you understand. Let me see if I can get an example about that. So for an example, you see the beginning of this downtrend. You see that the way the market was flowing, it changed as time goes on. For an example here, the market was moving very, very strong, and all of a sudden it broke out, tempting you to think that it's a breakout to the buyer's side. Unfortunately, the market continued to move all the way down. But in this case, it's different. In this case, it's different because here, at this portion of the price, the market was moving in a very clear repetitive form, which is not disturbed by any surprising move. I hope that is making sense. So this is considered a healthy trend. So when it comes to executing your trades or entering this market, we have few methods that we can use. Firstly, we have the most basic one, which is using the intrinsic value of the price. When you're using the intrinsic value of the price, you actually have to, when you draw maybe a trend line, your trend line should be at the center or at the midly or at the average slopiness of the trend. I hope you remember in mathematics a line of intrinsic value. This is what this line means. It's a line of intrinsic value. So this line, for you to trade with it, you simply observe where the price is. Is it above or is it below the line? Meaning if price is above the line, it means that it is likely that the next move of the market is going to be a downward move, meaning it's going to be a counter trending move, meaning you don't touch the price when it is above the line. You don't touch the price when it is above the line. Why? Because we are expecting to see a corrective. But for you to execute your trades with the line of intrinsic value, you need to wait for price to breach and be below the line. When the price is below the line, once you see signs of the market going up, then that's when you're gonna be executing your trades. That's where you're gonna be opening your positions once you see signs of the market going up. So the line of intrinsic value, it's not like a trend line. A trend line, you have to draw it on the edges or on the lows of the market, but the line of intrinsic value, it goes in the middle or in the center of the trend, perfectly on the center. So I hope that one is making sense. That's the first method you can use. And then the other method, I will not dig much into trend lines because we know we are familiar with them, but I'm just going to highlight them. So before I get into trend lines, the other method that I usually use to execute my trades, it is using the retest method, which for me is a perfect method because it resembles areas of importance or areas of significance. So basically what you're gonna do, you're gonna be spotting your highs or your resistance, and those resistance are likely to become support at the next move. This is where the strategy of pivot points was created, because these are very, very important points of the price. For an example, if you can see here, for just clarity, it will be better if I can just push my line up the Y, because I want to cover this and I also want to cover that. So, but although there's an argument on where we should draw our structures, either in the tail or in the close of the candle, but for this case, because I want to cover this level and that level, so my line or my horizontal line is better at this point. So you can see that this was a support, and this was a resistance, and again a resistance, but then in the near future it became support. So this is a good method for you to detect when will the market reverse. Same thing applied here. Price bounced here as a resistance, and then in the near future, although it broke it, but immediately it was able to just come back in and go all the way up. Same thing applied here. Here is our resistance. It was broken, but it was able to be retested. And the same thing applies here, although it's not perfectly. Price bounced as a resistance and then did test with that wick or tail, and then in the near future it also bounced there. So there's something that I want to highlight even in this area. So this is a method that I usually prefer because it's a little bit better and a little bit accurate because it detects the areas of supply and demand, which are the most important areas in the market. Unlike a trend line is there to just tell you the flow, how the market is flowing, and usually the trend line works best in a healthy trend, as I spotted earlier, because a healthy trend is bound to flow at the same flow without any change in the future, or without any change at the current moment. Let me not say in the future, because it is likely gonna change. So a trend line is there to detect the flow. That's why if you're using a trend line, you also need to pay attention into these areas of support and resistance, or if I may say in good terms, the areas of supply and demand. I hope that one is making clear sense. So another issue that we have, let me erase everything. Another issue that we have as traders, it is usually to find a trend when it is about to end, and usually we trade or we take a position and we find that the trend absolutely acts against us. I'm going to make an illustration. Let's say here you detect this resistance and you say, okay, I'm waiting for it to be support, and it indeed becomes support, and you buy. After you buy here, this is an arrow. After you buy here, the market collapses against you. So what you should observe as a trader, you should always observe the strength. You should always observe the strength. The strength is like the fuel which will keep the trend going. If the strength is weak, the trend won't go any longer. For an example, you can see here a corrective wave, a corrective wave, a corrective wave, and a corrective wave. So I have four, maybe this is the fifth one. So I have 5 corrective waves, the most recent ones, and then I want you to pay attention on this corrective wave which you are taking your trade from. Look at it. It is completely different from all the other corrective waves. How is it different? It is different in terms of strength. It took a lot of time. It is different in terms of momentum and strength. It took a lot of time, and it is big. It is big compared to all the corrective waves. It took a lot of time for your buyers to try to bounce back here, because if you are assuming to buy here, it means that you observe that, okay, my buyers can be taking the price all the way up here. And if you can observe, it will have taken them a long time. This corrective wave is too big for you to enter that trade. And before you can even look at the corrective wave, let me clear again the screen. You can observe this high and you can observe this one. You can see that the distance between the two is very, very small compared to the distance between this one and obviously that one. The distance is very, very small, meaning here when the buyers tried, they didn't push much. This was also a signal to say, observe, something wrong is happening. When they tried, they didn't push too much. So that's why when the market collapsed here, when the market collapsed, you as a trader, you would have paid attention and say, okay, although I think this is a corrective wave, but buying here can be a little bit a risk. Why? Because this is a sign that sellers are coming in the market, and they are coming in the market with some strength. Again, before you can observe this corrective wave, you can also observe a breakout of this low. This low was broken here, which is something that now disturbs the pattern of a healthy trend, because it has higher highs and higher lows. So by the break of this low, it means that we no longer have this sequence of higher highs and higher lows, which makes the trend unhealthy. So you should observe things like that before you can execute your trade. So I hope everything is making sense. So then when you enter your trade, it will be very, very easy. You just enter your trade by observing the market behavior and obviously the patterns, that where patterns come in. But before you can enter a trade, make sure that you identify the strength, you identify how healthy the trend is, you identify how the trend is flowing. So that's it, guys, for this video. I hope everything was making sense.